Well, turning now to oil, and U.S. refineries are working harder than ever to meet the growing demand both at home and abroad. And that brings us to our notable number, 18 million. That is how many barrels of crude oil per day refineries in the U.S. processed early last month. Refinery activity for 2018 is expected to hit a record high, and it will be the second record high year in a row. All right. We're joined now by Jerry Bailey. He's the president of Petroteq Energy, and he's also the former Exxon president of Arabian Gulf Operations. Jerry, great to have you with us.
Thank you very much. It's my pleasure.
Let's talk about this oil refinery activity. As we said, expected to hit an all-time high this year. That would be 2 years in a row. What do you make of that? What do you get from that data?
Well, definitely a lot of it has to do with the economy. Things are looking up. Things are happening. Energy is being expended, and that means more refining capacity is being taken up. And yes, everyone seems to be running full tilt, and I think it's all to the good, but it's at the top, you know.
Is there concern that the global trade tariffs will impact U.S. GDP, thereby global GDP, and thereby refinery activity?
You're right. It's all a trickle-down effect, and I think there will be some effect, but I don't think it's going to be severe. First of all, I think that the tariff business will gradually be sorted out. I think cooler heads will finally prevail. And of course, you've already seen that they're allowing a lot of little loopholes kind of with the oil situation per se. So that's not going to be a real big deal, but it definitely has an impact. But the demand is going to continue. The consumer needs the product, and so I think we'll still see a growth in the refining needs.
Absolutely. Are you surprised, though, that electric vehicle sales haven't cut into gasoline demand? Because that was certainly the sentiment 5 years ago, 10 years ago. Watch out for electric sales. Nobody's going to want fuel-operated cars anymore, and that's going to impact the gas market.
Well, of course, you know, this is my opinion, obviously, but I never felt that electric would really take off that well. It is a niche market. There is a demand. There are people who like that. But the American automobile is, you know, America and apple pie type thing. And I think the hydrocarbon-powered, vehicle is here for a long time to stay. The electric idea is great, but there are a lot of things that never were and haven't been sorted out, like, you know, ease of recharging,
right,
to be able to have long-distance movement. So it's not a big deal.
An anxiety range to compensate for the fear of not finding a charging station. Most of these are dual electric and dual fuel, so you do have the fuel to kick in there should you run out of electricity. I want to get your thoughts on what's happening in the Permian Basin and in Texas and New Mexico, because there is a buzz of activity there. New oil rigs, hotels, jobs. What's going on?
Well, it just so happens that I was in the Permian Basin in Midland and Odessa out there in West Texas. It's about 2 weeks ago, and you're very correct. It is almost like it's a new boom. You cannot find a hotel room. You can't get into a restaurant. The streets are clogged with trucks hauling oil and oil supplies. The Texas Highway Patrol has put extra people out there because some of the highways have had deaths and fatalities that they'd never seen before. It's a boom city, and people don't normally see that, but everybody sees the need to produce more oil. The prices are up, and it's really happening.
Is this enough, though, to make the U.S. a leader in the oil exporting market? We are energy independent. The U.S. is exporting oil, but what is it going to take for it to be up there with the OPEC members? Well,
it is a great achievement, and we are at the point now where we're essentially becoming independent. But that is, you have to be careful how you phrase that. I mean, people think that is a permanent deal. I see it as being on par with Saudi Arabia and Russia, are the other two big producers. But still, it all is dependent on prices. America being a free trade type of approach or entrepreneurial type of approach and without government control, if the prices was to tend to dip, then obviously there won't be as much production. So, you know, it tracks the world market.
Jerry, we've got the sanctions on Iran's oil going into effect in November. Looking at that picture and what you've just discussed, what impact are the sanctions going to have, and what is your outlook for oil over the next 6 months?
I do not think the sanctions will have a big effect. they will have certainly a political, a geophysical effect, and a geopolitical effect. But there's going to be a lot of oil flying, and not flying, but flowing out of flowing out, particularly to China and to India out of Iran. It may be at 2 o'clock in the morning, but oil finds a way. It tends to. It's the lifeblood. People and countries need it. So although on the surface we will knock down the amount of oil coming out reportedly from Iran, we will pick it up in other locations, and other efforts will backfill for that. But it will have some effect, and it's a good idea. Mm-hmm.
On the spot outlook for oil over the next 6 months. Give me a number.
You mean on the price of oil?
Yes.
Yes. I'm still sticking to my feel that we will be in the $70 to $80 range. I'm surprised we haven't gotten back to 70, but I think we'll be in that range.
All right. Always great to have you with us, Jerry. Appreciate it.
My pleasure. Thank you.
Jerry Bailey there.